Good evening. This is Ken Long from Tortoise Capital Management with a quick look at the daily market summary for August 17th, 2009. We remain in bull quiet. Annually, we're in the mid-ground between overbought and oversold. However, the minus 37 on the 10-day index tells us that we just had an extraordinary volatility move down today. That as much as 40% of the range of the last 10 days, we gapped down and closed that far below the 10-day trading range. So that's significant. And you can see here on Williams percent R10 that we are now in oversold conditions. On the gap stat, still 60% of the time the market is reversing its morning gap. And we're going to take a look at maximum pain candidates in the Dow 30 and the S&P 100. These are all real estate ETFs that have been getting hammered. They've been the previous leaders. So once again, extremes do yield outsized performance, good or bad. Now, you can see here that everything fired on the overreaction system with the exception of EFA, and we've done separate videos on that. Everything fired on the channeling system. You can see our pivot points. Volatility is still relatively low, extremely low. We are in a bullish conditions here, as you can tell by the 200-day moving average, the price relative to that, and then the slope of the 50-day moving average. And you can see, again, that we are oversold. The regression line slope has started to roll over and is getting ready to cross its own 10-day moving average, which is an indicator of the end of this long, strong move that's outlined here. Volatility still very quiet, is below the red line. You can see ADX rolling over, plus DI approaching minus DI, and that difference is now at a 20-day low. 5-day down candidates when we screened at stock charts. Campbell's Soup. We're always interested in these, our usual suspects. Merck made money today in a dramatically down market. I think it's because of the healthcare public option being off the table. Triple screen systems, again, now these are based off the work of Dr. Alexander Elder. These are things that have been powerfully trending up and have pulled back to close below their 20-day moving average. And that creates a condition whereby buy-on dips can be framed in a very favorable manner. And we got an extraordinary number of large caps in here. I see Weyerhaeuser, Campbell Soup, Kraft, Philip Morris, Amgen, Johnson & Johnson, EMC, Apple, AT&T, and Intel. Intel is especially interesting to us. On the ETF side, you can see what we have is EFA and SMH. So those are both candidates for triple screen buy-on dips. So that's a quick look at the market. There are some tactical reasons to be very interested in tomorrow buy-on dip opportunities. They abound, so there's no reason to chase. If we don't get a buy-on dip tomorrow and it sells off, again, we got a 2 or 3% downside to get to the next normal support level, at which point we may see a morning hook. So the important note for tomorrow is don't chase. Frame your favorites. There's a number of cows. There's a number of tech leaders in there. There's global and then there's U.S. The real estate themselves, you can just see from the max pain. They didn't show up on these screens, but they were so good last week, and this pullback now may create a tradable dip as well. So tactical targets abound for tomorrow, but do not be in a hurry and don't chase. Thanks for your attention.